Every parent thinks they've got the bases covered: the college fund, the car seat, the pediatrician on speed dial. But what if the one thing quietly protecting your family's future is a policy most agents never bother to mention? We're talking about convertible term life insurance. And before you click away, just know that this isn't your grandfather's boring policy meeting. This is the upgrade hiding in plain sight. Here's the setup. You buy a term life policy, pay reasonable premiums for 20 or 30 years, and if nothing goes wrong, the policy just expires, like a gym membership you actually used. But a convertible term policy has a trapdoor built-in one that lets you flip it into permanent coverage without ever taking another medical exam, no matter how many doctors you've seen since you signed up. The reason this matters so much right now is that parents are buying term coverage in their late 20s and early 30s while they're young and healthy, then watching their health shift by their late 40s in ways nobody predicted and nobody planned for. Diabetes, heart conditions, a random autoimmune diagnosis, the very things that would disqualify you from new coverage later are the exact things this conversion option quietly sidesteps. Think of it like a golden ticket that came free with your Wonka bar. Most people throw the wrapper away without reading it. Insurance companies aren't exactly running Super Bowl ads about this feature because, frankly, the conversion option benefits you far more than it benefits them. Once popular advice told young parents to just buy term and invest the difference. And for many households, that's still solid guidance. But that advice quietly assumed your health would stay the same, your income would grow, and you'd always be insurable, three assumptions that age about as well as milk left on the counter. Studies from the life insurance industry show that nearly 30% of adults develop a health condition by age 50 that would significantly impact their insurability or premiums if they tried to buy new coverage. That number isn't meant to scare you, it's meant to reframe the value of a conversion rider from a footnote in your policy to the most strategically important sentence in the whole document. Historically, the concept of convertible coverage has existed since the 1970s, yet financial literacy around it remains shockingly low. Sort of like everyone knowing seatbelts exist, but half the car not knowing there's an option that also inflates around you. Every generation discovers this tool about 10 years too late, usually right after a diagnosis or a milestone birthday when the window to convert has quietly closed. The biggest misconception is that converting means your premiums will stay the same. They won't, and that's okay. Because the point isn't cheap coverage forever, it's guaranteed access to coverage when your circumstances change. You're not locking in a price, you're locking in the right to be accepted, which is a completely different and far more valuable thing. Here's the practical side. When shopping for term coverage as a parent, you want to specifically ask your agent whether the policy includes a conversion privilege, how long that window stays open, and which permanent products you're allowed to convert into. Not all convertible policies are equal. Some limit you to converting only into overpriced whole life products, while others give you access to more flexible, universal life options. So read that fine print like your financial future depends on it, because it does. The disciplined move here isn't to immediately convert, it's to buy the term policy with the conversion option baked in. Pay your normal premiums and treat that rider as an insurance policy on your insurance policy. If your health stays perfect and your wealth grows, you may never need to convert, and that's a win. If life throws you a curveball, you already have the glove. There's a beautiful irony in the fact that the parents most likely to need permanent coverage later, the ones managing chronic conditions, the caregivers, the ones whose financial picture grows more complex over time, are the very people who benefit most from a decision made when they were perfectly healthy and didn't feel like they needed it yet. Discipline in planning, much like discipline in investing, is almost always exercised before the moment of need, never during it. At its core, convertible term is a story about optionality, the underpriced, underappreciated currency of any good financial plan. You don't convert because you have to. You convert because one day you might want to, and that day tends to arrive wearing a doctor's coat and carrying a clipboard. Position sizing matters here too. Don't over-insure yourself into a premium that strains your monthly budget just because the conversion option sounds exciting. Buy what you can sustain, protect the conversion window, and let the strategy age alongside your family. rather than forcing a dramatic pivot that disrupts everything else you've built. Ultimately, the best financial decisions aren't the flashiest ones. They're the ones you made quietly, years ago, that show up exactly when you need them, without requiring you to remember why you made them. Convertible term is that kind of decision. Boring at purchase, extraordinary at conversion, and almost invisible in between. Whether you're ready to explore convertible term policies, dive into real estate investing, or connect with trusted lenders and home contracting professionals, check out the links in our description below and let us help you take the next step.